Hello and good evening, and welcome to the Business and Banking Dialogue Show, your one-stop show, which comes to you bi-weekly every Wednesday and Friday. So today we are with a very good topic, which is a hot topic, which is the bad loans back, or the bad loans back. So, ladies and gentlemen, Finance Minister Nirmala Sitharaman has proposed creating an ARC, reconstruction company, for India's bad debt laden lenders to offload the sold assets, which some analysts estimate to be about 100 billion. There could be plus or minus more depending on the pandemic and how long this pandemic goes on. Banks have both good and bad assets. Okay, by segregating the two, the bank keeps the bad assets from contaminating the good. So long as the two are mixed, investors and counterparties are uncertain about banks' financial health and performances, impairing its ability to borrow, lend, trade, and perhaps raise capital. The bad bank concept has been used with great success in the past and has today become a valuable solution for banks seeking shelter from the financial crisis. And we all have been hearing about the soaring NPAs from all the banks, right? So there seems to be some light, some solution at the end of the tunnel, light at the end of the tunnel, to say that these bad banks can now be bad loans can be put to another bank. So how is that going to happen? How will it work? What are the impact? Will it have the implications of all these? We will discuss today. Okay, so I'm KK. As you know, and we are live on YouTube, Twitter, LinkedIn, and Facebook. So, as I said, to discuss on the bad bank loan, we have with us Mr. VG Kannan. He is an experienced banker. He was also the CEO and COO of SBI Capital Markets. He's got tremendous experience. He has over 20 years plus in various capacity in the bank. Like I said, he's an experienced banker. He was also the CEO and COO of SBI Capital Markets. So you can see his profile, which is right in front of you. In his last assignment, he was the CEO of the IBA, Indian Banks Association. So give you a minute to go through his profile. He has been with us in our earlier shows, and so good to have him again. Welcome, Mr. Kannan. How are you?
Good, thank you, sir. Thank you. How are you, sir?
I'm good. Yeah. So, could you give our audience a top view on what is this bad bank loan? How is it going to work? What is the structure? How is it going to have an impact? If you could talk about it.
And thank you, Mr. KK, for having me on this once again. And I've been following this, and I've also been participating in this and dialogue of yours for the last 1 year. And very interesting topics. And
yes.
And as you said, it's also the relevant topics at the relevant time. And this is the hot topic now, bad bank, or whatever it is going to be in the new nomenclature. So before that, I would like to make I'll make a small presentation with your permission.
Yes.
And then we will go ahead. Yeah.
Sure.
Is it visible?
Yes, it is visible. You can put it on screen. Yeah, thank you.
Right. So in fact, like Mr. KK rightly mentioned, banks have been having this stress assets for the last, if I'm not missing, 10, 15 years or even 20 years. In the past, the stress assets were either sold off or somehow there was always a practice of trying to restructure the accounts and keep on, like someone would say, kicking the can down the road and trying to see, hoping that the tide will turn and the market will improve. It has worked quite often in the past, especially in the previous century, the last decade. It's also in the first part of the decade. But with the changing scenario where the markets have the exposures have gone up very high, it's also the requirement for higher capital whenever an account is become stressed in view of the stringent guidelines of the Basel. It was found that in many cases, simply trying to kick the can down the line doesn't work, and we need to arrive at a solution. So some of the banks, if I'm not mistaken, right from the beginning of 2000, have started identifying these stress assets or what you call bad assets or rehabilitable assets in separately, and a separate verticals were started. Well, a couple of banks did this quite regularly and tried to do this, but most of the other banks were way behind, and they used to mingle both the good assets and the bad assets. So if you see what happens is the time to be spent on an asset which is to be restructured is almost 3 times more than the time to be spent on a good asset which is running well. Whereas the returns are going to be much lower. So the returns on the time allocated to the stress assets was going to be lower. Then over a period of time, there is a realization that everyone should start giving separate attention to this, and the mixing up of the good assets and the bad assets should not take place. And therefore, the segregation and the concept of stress assets division or stress assets group started being formed all over the banking system. And it became easier also that the one bank should easily interact with their counterparts in the same field, rather than a person. Suppose you are talking to someone who is handling a very good asset and a very bad asset, and he will say, "No, I'm a bit busy with something else." Whereas if you are in the same field and if you're both of you feeling the same pain simultaneously, then I think you tend to join together. So that is the beginning of this concept of trying to have a bad asset. Then the RBI came out with this concept of ARCs, which were supposed to do the restructuring and reconstruction of these companies. And various rules were given, right? What we call the 595, then the 1585, then the 5050, and so on and so forth. Some of them did work, and in many cases, the banks actually merrily and very willingly passed it on because they had not provided fully, and due to the higher valuation they got, they could write back some of the provisions. But having said that, I think over a period of time, the realization was that even that did not work out well. Yes, the IBC process which has come has certainly given impetus to a proper resolution, and even the existing promoters also have to be a bit careful that they are likely to lose assets, as we have seen in the case of few cases. So now there are still a number of cases, especially in the last 2-3 years, and thanks to the pandemic, and things are likely to become a bit bad in some of these assets. And post the AQR of 2015, all the banks had this stress assets divisions, and they still had a number of assets, and mostly ranging from 200 crores to 2,000 crores, etc., which could not be resolved. Some of them, of course, due to reasons beyond the control of the promoters, sometimes beyond the control of the bankers, and also a few of them because of some fraud elements. So the idea was that to free the bankers of any of managing these bad assets, therefore the concept of a bad bank was mooted over the last 2-3 years in various fora. So various people in different forums, and as also in different media and discussions have been mooting this idea. The idea was that these bad assets, which are taking up a lot of time, energy, and capital, could be put in a separate institution. And in as much as it also would have required some additional provisioning, they expected that the Reserve Bank of the Government of India would pitch in with set up a bad bank, and also will ensure that the transparency, what you call the issues regarding pricing, also will be resolved, because it will be transferred to a government undertaking. So there was a need for an institution to park all these highly stressed assets. And as you saw, the PSBs have been participating in a big way in many of the what you call infrastructure assets, and many of them have been in trouble. So there was a requirement for this. In addition, you must have also noticed that there was the entire banking system, especially the PSB and some of the private sector banks, were started funding infra assets despite two shortcomings they had. One is I would say three shortcomings. One is the lack of deep knowledge about the infrastructure. Second is the lack of long-term funding. And the uncertainties which are there due to such infrastructure funding was also not there. Therefore, there's also a deep discussion in the last few years that we need to have a institution to provide long-term funds. So it was a welcome FM's budget announcement that they will be setting up a DFI to take care of the financing of the majorly infra projects and also the large projects. And the funding is expected to be easily available due to certain incentives which is to be provided to them. The exact nature of the incentives, etc., is still to be worked out. And if that happens and they are in a position to get long-term fund, I think there will be some ease in getting long-term infra projects financing. Then there was also an announcement regarding the bad bank type of structure to address the stress assets. The current thinking, and this is all as per discussions I've had, and I've also talked with some of the bankers, that this will be a 2-unit structure in the case of the bad bank, or so-called bad bank. There will be an ARC to consolidate the assets purchased from the banks. So this ARC will be almost on the lines of the normal ARC, but it will be an ARC which will have certain features and which will also have certain conditions attached to it in the form of how they expect the assets to come into it. Then there will be a separate AMC to manage the assets in the ARC till such time as they are in a position to find a suitable buyer or dispose of the assets as the case may be. As I mentioned earlier, there is a big expectation that the government will infuse capital, and indirectly this capital will also flow into the banks, and therefore it will help them to recapitalize. One major advantage was that all the assets will get transferred. All the assets of what happens is a particular asset is financed, say, by about 8 or 9 banks. Then now, instead of 9 of them going to different ARCs and asking for bids, you have the issues of L1, L2, H1, H2, as the case may be. So this particular structure would ensure that all of them pool in an asset at a particular formula and give it to the one single unit. Since all the exposure will be now concentrated in one single unit, they will be in a position to dispose of the asset in a suitable manner by way of resolution or restructuring, or as the case may be, a sale to a third party. The expected process is as follows, with some tweaks which could be possible down the line because it's still early days. The ARC is likely to have the title of a national ARC, approval for which I'm told has been received. The equity infusion will only come from the bank and the financial institution. There won't be any other party. And invariably, I think the equity, the banks and the institutions who are interested in selling their assets would be the ones who will be there. And right now, the public sector banks itself, a number of them are very few. And a few private sector banks and a couple of financial institutions are likely to be a part of it. And the idea is to include.
One second. Yeah. Yes, is it optional? Is it optional for the banks to say that okay, we want to sell the asset to the ARC, or they can say no, we will not give this?
See, what happens is the process will be explained later on, sir. Basically, what happens is the ARC will approach the bank with a particular pricing for a particular asset, and the lead bank is expected to get 75% of the exposure together, and then make the offer to the or respond to the offer made with the ARC. So invariably, it will be made subsequently mandatory. Initially, of course, if more than 30-40% of the people don't participate, then it will be the same situation as earlier. But the expectation is if 75% has already been come to the ARC, then the other processes, either in IBC or even restructuring, will not get stalled because of the hesitancy on the part of a few banks. So coming back to this, what they have done is they have identified. They said only those assets with a exposure of more than 500 crores will be there. And the exposure will also include NFB exposures which have been actually issued, in the sense if there's an LC which has been issued or a bank guarantee issued, and which is a strong probability of it becoming converted into fund based, either on maturity or on invoking. That also will be taken, because in the IBC process there are it is a gray area. Second is the banks and institutions I'm told, identify about 60 to 70 units with total exposures of around 200,000 crores. And the exact numbers will still be, it will be finalized. I'm told it's around 65 or something like that. These assets will be sold to NARC under 3 or 4 buckets based on certain evaluation criteria. See, normally what happens is whenever a particular asset goes to the ARC offers 17 paise to a dollar, cents to a dollar, 25 cents to a dollar, 30 cents to a dollar, depending on their rating of the asset, the quality of the assets. So instead of having too many buckets of 17, 13, 14, 35, 37, so they have likely to have some 3 buckets. One will be at 10%, one will be 20%, 30%, 40%, maybe 3 or 4. And each of these companies will be identified under one of these buckets. And it could, in the ultimate, there could be slightly more or less than the evaluation. Most probably it will be more than this. So the idea is to have a uniform structure, uniform buckets. So each of these assets will come under these 4 buckets. After bucketing these assets, the NARC will offer this to the lead bank, as I mentioned earlier, and 20% of the exposure is available and will be sold to the NARC. And this will ensure that all the stumble blocks which we had in resolution will all not appear, because they will have 75% of the exposure. There is an option. I don't know whether it will really work out. There's a lead bank. So suppose the NARC says, I'll give you 20%. But the lead bank feels it should be around 30, 35% for whatever reasons. It can technically run a Swiss challenge process, in which case it will say, I'm getting an offer of 20%. Is there anyone who can give me a better offer? And in case they find a better offer, say 28% or 30%, then combined, they can take a call. They won't send it to NARC, and they'll send it to some other ARC. But the other ARC cannot pick and choose. The other ARC, which is going to come, will have to pick up the entire exposure which has originally been taken up, would have otherwise been taken up by NARC. So they cannot say, no, I will take only 25% of the exposure, 35% of the exposure, because my capital is not there. One of the reasons why NARC has been set up is because many of the other banks don't have that kind of capital. And other ARCs don't have that kind of capital. It is also expected that many of these assets have been around for 3-4 years as stress assets. And normally in a period of 4 years, the entire thing is fully provided for, almost provided or fully provided for. There are certain conditions which has been stipulated or been thought about, that any asset where there's a fraud which has been involved will not be a part of this asset to be sold to the NARC. Whereas the NCLT is already in process and it's an advanced stage of resolution, that also will not come. Otherwise, you're reinventing the entire thing and starting afresh. And third, anything which has already gone into liquidation and the process of liquidation is being considered, I think that also will be out of the scope of the units to be sold to NARC. Ultimately, it's expected around 200,000 crores. I'm giving this as a ballpark figure, may end up with the NARC. The terms of offer would be 1585. That is 15% of the value will be given as cash, remaining 85 in the form of security receipt. The SAR is now being offered by the NARC will be guaranteed by the government for the face value payable at the end of the 5th year. For example, suppose there is an asset of 1,000 crores and it is purchased at say 10%. So out of 1,000 crores, 100 crores will become the new value now. 15 crores out of it will be paid to the banks by the NARC. 85 crores will be by way of 85 crores will be by way of SR. Now the face value of 85 crores payable after 5 years is protected by the government. In the sense, government guarantees that amount will be payable to the holder of the ARC at the end of the 5 years. So, with the result, in the interim, if suppose some money has been realized by the NARC, then it can be sold to the, then to that extent, the guarantee will get reduced. Suppose, say, out of the 85 crores, they have been in a position to sell about 35 crores or 40 crores. Then remaining, say, 40 crores, then 45 crores is the maximum which the government has to pay. Therefore, the government's cap is at is already decided, and the as far as the banker is concerned, he knows the worst case scenario at the end of 5 years, he's going to get another 85 crores. The from a ballpark figure on the various buckets, I'm told the average value is around 18% of the total exposure of 200,000 crores. The 18% of this comes to 36,000 crores is the total amount of the value of the assets as per the new valuation. 15% of this has to be paid by way of cash, and that comes to 5,400 crores. This cash outlay would be raised in the form of equity contribution from the banks, financial institutions, including REC and PSC. Thus, ab initio, there is absolutely no outlay by the government. Perceived benefits of the scheme. Assets are generally be fully provided, so no additional provisions need to be made as per RBI circular, despite the 1585 proportion being followed. Sometime in 2017 or 18, I'm unable to recall, RBI had issued a circular saying that anyone who holds an SR of an asset which has been sold by them under any scheme will have to provide fully on the entire assets. So effectively, the 1585 scheme became a non-starter thereafter. And you must have noticed in the recent past, in most cases, the banks have actually gone in for a valuation with 100% cash payout. So even if they're getting only 8%, 9%, but they want the entire thing is cash payout, getting 35% also cash payout. Rather than a scenario where instead of 35%, I'll offer you 50% on 1585, people prefer the total cash and they want to completely have hands off of the particular asset. The capital infused into the NARC will return to the bank in the form. So effectively what I said, 5,400 crores will go. And this 5,400 crores will come back to the banks being the 15% of the valuation. So the upfront 15% cash will be received by them. And in as much as these assets have been fully provided for, and the realization can be taken directly into the profit of the bank, and the profits go up. Of course, the issue as to how to treat the exposure on the NARC has to be seen, and that I'm sure RBI will take a look at it. The SRs being fully guaranteed, it is almost like a zero coupon bond. It will become like a zero coupon bond that, at the end of 5 years, you're going to get 100. Technically, it has got a value. So banks which do not have the patience to wait till the last 5 years can technically sell it off in the market at a discounted value. The buyer might say, okay, it's being offered at 30 rupees, and I think even if I pay the entire amount, I'll still get much more because I know there is more value in it. So other ARCs could also buy it. And therefore, it is expected that many of the SRs also could be traded. And some of the new ARCs also may be holding it. And in many cases, it could be the bank which will be selling it off and then making their own profit. And thereby, they will completely wash up their hands of the asset and also increase their profitability. The timelines are there. A few more slides only. The NARC application to RBI for approval of license. No major issues are expected after Ghar ka Mamla hai. All the bankers, all the institutions are all domestic. You don't have any outsiders. You don't have any KYC to be done. If the KYC is done, then something is to be wrong with the central bank, because all the bankers are already there. Unless they find that some of the promoters of the banks are not trustworthy. But I think this should be cakewalk. Second thing is they don't have any objection, mainly because most of the assets are already fully provided for. Therefore, even if it's a 1585 rule, it doesn't make any difference to them. Assets to be sold to NARC identified are in the advanced stage of identification. I'm told most of them have been identified. there could be one or two cases which are on the borderline, which could be there. Even the buckets also, I'm told, has been finalized. The formality of the guarantee of the government of India for the value of the SR has to be completed. How the entire modality has to be worked out has to be decided. An application has to be made to SEB for registration of the AMC to run the assets now in the trust under the ARC. In AMC, I expect to start the process and complete the process of resolution and sale of disposal of assets within 6 months. That's a big ask. But even if it gets done within a 1 year or 1.5 years, I think it's a wonderful thing. Mandatory sale of the assets by the banks. Yes, sir. Some large private sector banks have also agreed to be party to it because they also have exposure. And this will ensure that, since more than 75%, and I'm sure in many cases it can even be 100%, the further delays on account of resolution, etc., will not happen because it will be a single unit which will be doing the entire process of selling the company or running the company, as the case may be, and then doing it. It is expected this AMC will actually run the company using some experts in the industry, infusing some capital, and then improving the quality of the assets, and thereby hoping to fetch a higher return, both to themselves as also to the bankers. Because although hypothetically it has been said that bankers should take over the assets, I think it's physically impossible, and I have not seen many cases where the bankers are in a position to take over the assets of a running manufacturing company or a processing company and run it. So I think it's better to be left to the experts, and that's what the AMC is supposed to do. The entire process is expected to be completed by FY23 or maximum by FY24. I told you because of the timelines of 6 months to 12 years. Because even the transfer to ARCs might take about 6 months to 1 year. It might get almost to the end of the FY22. The staffing of NARC will be will not have so much of an issue, and they expect that the activity is going to be more like a routine maintenance, and therefore they expect that some of the bank staff could be on deputation people, either retiring or about to retire or a couple of years to left, and who have expertise in this because they have handled these assets in the past in the respective bank. So some of them will be taken on deputation or to the NARC. The AMC, on the other hand, is expected to be of experts who have done turnaround specialists, and maybe the likes of Alvarez Marshall types and others, and some of the people who have actually retired from other industries and who could be consultants to the AMC could also be taken on board, either on a retainership basis or on a permanent employment basis for a short time. And their expertise will be used to see how do we turn around. It could have financial specialists, it could be industry specialists, and so on and so forth. The pros and cons of this particular exercise: the structure facilitates monetization of the assets which have been lying idle with limited scope of resolution. The limited scope of resolution is mainly because of the plethora of banks, 8 banks, 9 banks, 10 banks. Hypothetically, all the banks are under an umbrella called IBA. But once you step out of that, in such cases, especially when it comes to financial assets related finance, there are differences of opinion and it becomes difficult. But once the entire thing is being sold to a single unit, thereafter ARC, NARC is expected to come to a resolution. And the time taken for decision at every process, if you want to have an auction, you have to get a voting. And again, you want to get a bid, you have to get a voting. If you want to again accept a bid, you have to get a vote. You want to revise the bid, you have to get a voting. So all those things can be reduced, and timelines can be shortened in case of this. Early realization of profit, as I told you, many of them have been fully provided for, so they will straight away have a 15% will go to their bottom line.
Yes.
The government also will be totally happy because government does not have to shell out a penny, except they are going to lend the name of national to the ARC and the AMCs. I don't know that the AMC also will be named national, but the ARC is being named national. And second thing is, they there is no decision as to whether there will be a guarantee commission. After all, it is giving a guarantee on behalf of the NARC to the bankers. There is no talk about it. We don't know whether it's going to be there or because it is not going to have a impact immediately. They may actually forego this, but that is a gray area. I am not sure. I've not come across anything on this. The government liability is capped to the extent of the face value of SR. So, if, like I told you, at best it is going to be 85% of the 18%, which comes to around something like around 27,000, 28,000 crores payable after 5 years. Less the amount which is realized. It is not that all the SRs are going to be realized at the end of the thing. Believe me, there's a small catch also here. If the bank has goes in for a what you call Swiss auction, and they are in a position to sell it to some other asset, that particular asset will not be covered under this SR. Therefore, that's an incentive for the banks also to sell it off and get a higher return, and in which case the government's cap also, government exposure also will get reduced. All the banks would sell to the NARC, as I mentioned again and again, enabling the single party to determine the process of the resolution, sale, disposal of the asset as the case may be, speedy decision making. Time delay can be avoided with only one party. Overseeing of the person, advantage and disadvantage. There's always a case, even if I have delegated some authority, but then subsequently say, you should ensure that the process is properly being followed. If the same public sector banks are supposed to oversee the entire processes, then you're not going to go away from the existing shortcomings of the processes. So that is something which has to be worked out. Once it has been given to the NARC, a private limited company, it should be a hands-off approach, whatever be the decision taken. And as I mentioned, if there is 75 to 100% of the exposure that's sold, no incentive for others to dissent for resolution and NCLT process, because they know that because the majority is being held with a one single unit, any opposition will, unless for other reasons like fraud or something, in which case the entire process will be vitiated. But I think there won't be any dissent possible, and for all you know, they will also join hands. Optics of it. Banks put money from one side and take it as profit from other side. One as an owner, equity investor, and on the other side as seller of the asset. Whether it could be acceptable internationally, I don't know. Nothing wrong, but how is it perceived? I remember a few years ago, some bankers actually broached this idea. Bank A and Bank B have got two assets of 1,000 crores each, and each knows that each has got a value of say 25%. 1,000 crores each has a value of say 35%. But as on date, both of them have written it down, and they know that they're having some problems. So what they sell, Bank A buys the asset of Bank B, Bank B buys the asset of Bank A at a particular price, and then both of them have increased the profit. So it is like almost you scratch my back and scratch yours. But that I felt was not maybe ethical. But this could be because it's going to a third party. It could be possibly acceptable. And I think that's the reason why the central government is also pushing for this. And I think it's a good idea. The banks would be free from the time being spent on the managing. By this, I'm expecting almost 50% of many of the bank's assets, especially the large bank assets, would get freed. And that means the staff which is now spending a lot of time, banks like State Bank of India has got one MD who is looking after stress assets. Of course, he's supported by DMDs and a plethora of CGMs and GMs and DGMs and so on. So you can imagine the amount of relief of this staff, which can be used for other activities for furthering the business, both in either liability side or increasing the credit quality. Because the same officials who have been handling this, to some extent, will also know what are the pitfalls the banks had while doing the sanctioning or the processing. And therefore, the quality of the assets, hopefully, going forward, could be improved when they start diverting the excess staff to the credit lending with no baggage whatsoever, and the banks will not have to get worried about the provision to be made every quarter. A new set of professionals are likely to come up: consultants, turnaround specialists. There are a few of them there, but it's not coming in a big way. Valuers, industry specialists, auditors, tax HR consultant would also be there. Time will decide if this is a success. Proof of the pudding is in the eating. It is on paper, it appears to be very good, excellent, and I think hopefully it should work out. If this is successful, it could be a big plus for the bank and the government of India for having sort of removed a big headache in the economy. Hopefully, this will not be a permanent setup. Else, it could be a way to park all bad assets. Otherwise, banks will start saying, it's become bad. If you remember the good old days when we had IDPA and that's a scheme. So everything you just refer it to them, and then subsequently anything was sold to ARC at 595 and 1595. And therefore, it is essential that this has a limited time frame, maybe 3 years or 5 years maximum, or earlier if they're in a position to resolve it, and it's closed once or over. Otherwise, it will lead to careless banking. People say, "Oh, if it becomes NPA, so what? We can sell it off to this NARC, and no questions will be asked." In addition, in as much as the government cannot be seen to be bailing out the banks at every juncture, I think providing a guarantee for future results also could be an issue. And therefore, I think that this may not be a practice to last for long. Funding of the assets to run it and run the process. Initially, it is expected that some of the banks may fund it. They could also have some specialists who would like to do some funding of the same, and it could be some priority funding would also be there, because we have already seen in the case of IBC some priority funding hesitancy initially, and subsequently some people were very keen to do it. And once it runs the process, because in many cases, many of the companies have actually gone down, partly because banks now are hesitant to give additional funding because of questions being asked. But now with the ARC may be freely willing to invest money and turn around these assets. And once it's turned around, the valuation of the company also goes up, and it will get a priority return, and then the rest should go to the banks. This is not a permanent panacea. This is not a panacea to bad assets, but yes, I hope it will be a one-time temporary cleanup. That still leaves issues regarding how to dispose of the fraud assets, where in addition to the account becoming bad and not being in position to run properly, they have also had some element of fraud. Though there's always questions as to whether a company which has got say 30,000 crores and has probably indulged in a fraud of 100 crores and 2 crores, 200 crores, should it be declared as a fraud on the entire 40,000 crores? The jury is still out on that. But as of now, the entire 40,000 crores is treated as fraud, and therefore they will not be reckoned in this. So how do we handle this? And we have seen many cases where there's frauds. There's been considerable delay in the processes. Thank you. And I thought that gives you a broad outline as to what is expected from this.
Yes. Yeah. So thank you, Kannan. I think there is a very good perspective on what this bad bank loan or bad loan bank, whatever the name that comes up later on.
Let us call it NARC. NARC. Let's avoid the word bad.
Okay. Okay. So, ladies and gentlemen, you are, I think you've got a good perspective, a good 60-feet view or 30-feet view of what is this whole proposal that the government has come up with, and it looks good to many. But I think Kannan has given a very, incisive information about what's there in it. Now, you may have a lot of questions. So, as usual, if you have questions, please put it in the Q&A box, and we will try to get across to Mr. Kannan those questions so that he could give you your answer. Should you want to ask a question directly to him, raise your hand, and you can ask a question directly. Our digital table facilitate that. So, Kannan, is the 15-85% ratio of the NPA values, is it fair? That is number one. Will it have adverse impact on the banks? Why can't it be higher? would it be fair to say that government, by giving cash plus guaranteed SR, is settling the NPA in full, which is close to 2 lakh crores, as you mentioned?
Say absolutely. In fact, what I'm trying to say is there are some assets where there's hardly any value. See, where does the asset value comes? Either it's a running operation or a fantastic brand value, which has got a machinery, which has got some good land, which can be used, etc. There are so many assets that got huge land, but now they're not even 30% or 40% of the project completed, and there'll be huge gap before it gets completed. Therefore, giving a value of higher than say 15% or 20% may be difficult. There could be other assets which are almost running conditions, but on account of some sales realizations or some other issues or lack of funding, they are not done, then they may get a higher valuation. So what I have given is a ballpark of different kinds of buckets. I'm not saying that all of them will get 30% or 10%. But the idea is just to say that it cannot be more than 30%, because if it all had been better valued, then the banks would have actually done the job much earlier. And then had it been 45%, 50%, 60%, the banks wouldn't have kept quiet. And in fact, they should be hauled up as to why they are not done earlier. So I think you cannot say after 4 years, I have not done anything and I still want about 70%. I think it's a bit far-fetched. One. But second thing is, I would say the government is actually not bailing out today, but it says, I'm giving you a relief today. So, but effective relief is only to the extent of 15% of the value. 15% of the value, so which I told you, come to 5,400 crores out of 200,000 crores. So banks are not going to get big relief. But only thing is, banks will not have to hand. Today, in many cases, the ultimate realization could be much lower, mainly because the time spent on by the bankers in handling this over a period of 2 years itself is considerable. Now you have a plethora of people situated in what do you call downtown areas, and working on this and trying to have meetings, first meeting, second meeting, third meeting. So it's quite an expensive affair. And therefore, people might say, we have seen in many cases that delay have been for 3 years and 4 years. And having seen that it is not worked out, I think this is probably a better way. People say, okay. And if the bankers felt that it's going to fetch a higher rate, they are free to go. They can say, I don't want to give it to NARC. Yeah. It's not mandatory for them to give to NARC, but if they have an alternative, I'm sure they all must have put their heads together and found out, okay, this is a better one than the one which they have been contemplating for the last few years.
Correct. It's not mandated. Okay. On the you did mention about how the NRC is going to be structured. Recently, I saw in the newspaper, foreign investors like BlackRock and KKR and a couple of others have also expressed interest in the bank. Also, as per newspaper reports, there are nine banks and 2 NBFCs will together set up the ARC. So I want your views on both. I also want to bring to your attention one more question, which is, I think, relatively, so you can answer all of them. Mohan Herleka asked a question whether HFCs will also be considered for this arrangement.
No, for now, I'll tell you, there are going to be, from the discussion I've had, indications are 6 of the public sector banks, 3 of the private sector banks, and 2 financial institutions, PFC and REC, may be party to this. There was some newspaper article about this KKR and BlackRock, I'm told. But my discussion says that no, it possibly could have been that they probably felt that they can become a part of the ARC and do it. But the government felt that in which case they may not be in a position to give the guarantee. No, it may not be possible for them to give a guarantee to a third party. And after all, if it's a banking system, then in which case it is okay. So I don't think so. As of now, any such thing is there. But they have a role to play, both at the time of the Swiss auction, if at all the banks can are carrying it out. And subsequently, they don't have to, if at all they have interested through their ERC structure or the AIF structure, they can buy these assets buy the debt from the ARCs and then run the company on their own with the promoters or outside the promoters. So they can, the assets which they have earmarked for stress assets can be invested in this. But as of now, as a directly part of an ARC, there's a loud thinking, and possibly they were also may have been part of the discussions, but I don't think so. There is any such thinking on this, from what I gather. So I'm also not a party directly, but it's only from discussions I've had with a few people. And I told you about the line. I told you about this KKR. What is the third question? You asked something about?
Yeah, Mohan Herleka asked the question whether HFCs
no. As of now, it is going to be mostly the manufacturing companies and the processing companies there. It could be, they also could be considered later on, but I don't think so there. I have not seen the list, so I can't really vouch for it. But I don't think so there is such thing.
Kannan, you mentioned that the SR which are guaranteed can be traded by banks because they will have a face value. So a bank may have maybe handing over 10 assets, so against which they get the SRs. Is it going to be like that SR is also linked to the asset that you are transferring to such that the trading values can change?
No, assets will be, SRs will be, say there are 15 assets. You will get 15 sets of SRs. So it is like, it will be like 15 different bonds of 15 different companies. It will be 15 SRs. Obviously, you cannot mix up one SR. So it will be technically 15 different SRs. The SRs are basically issued by the trusts that assets are kept. And that will be traded because ultimately there's a value for it. So people might say, okay, you may discount it at 10%, we may discount it 15%, and I'm ready to take it. Say, if I'm there, I'll say, who's going to wait for 5 years? And we don't know. And if my thinking is, and I may not be in a position to get more, maybe at best another 5 rupees, I might as well encash it and add it to my bottom line. On the other hand, if I feel, no, although they have given me only 85 rupees, I think I'll get about 120. In any case, 85 is protected. I don't need the money. Some of the bigger banks may say, I don't need the money now, but I think that I'm going to get more than 85. I might as well hold on. So it's going to be a different, but that could be someone who might offer, and people who are privy to the industry, that particular, or if they feel that that particular industry where the particular company is there is likely to boom in the next 1 or 2 years, they might say, okay, let me encash. So all kinds of permutation combinations possible.
So that means the 15 assets that are transferred, the 15 securities they get against that, they are linked to the asset company. They will be like, that's where the value comes, I guess.
Correct. The value will come from the original asset only. But as on doubt, whether there's value or not, the government is giving a guarantee that I'll pay you at the end of 5 years, 85 rupees. If nothing comes to it.
Okay. So, ladies and gentlemen, I have already taken a couple of questions from you all. If you have any more questions, please send it across. We have another 10, 12 minutes to go. So, Kannan, bad bank is, okay, let me change. National ARC, sorry. And National ARC is a tried and tested model in many countries, like if you take US, Sweden, Finland, Belgium, and I think recently Indonesia, and I think Malaysia also had. Did these countries have real success from what they tried? How different is the Indian bank model, where it has been, where we are saying that it could be lead to a success?
Let me admit one thing is, I don't have full knowledge, but from my interaction with a few people, and there has been a mixed bag. In some cases, I'm told Malaysia has a great success. I don't know the full particulars about it. In certain other countries like Brazil, etc., also it has been success. But certain other countries like Italy and all, they just sold it off and then say, okay, it was virtually sold off at pittance because they didn't want to. See, in many of the foreign countries, they don't want to have any sticky assets on their books.
Yes.
Because the time spent on a sticky asset is almost 5 times more than the time spent on a good asset.
Yeah.
It is like, if you have a AAA company, in fact, we used to jokingly tell in many of the boards also, the time taken for sanctioning a loan of 5,000 crores to a AAA, it may be 15 minutes. Sanctioning about 100 crores to a double B minus could be about 2 hours. Because there's always a very high risk associated to it, and all kinds of doubts what will happen, and you start doubting figures, etc. So people don't want to have this, and the margins are very thin abroad. So the people cannot take this cost, and whereas moment it goes, the other person, he takes it at a deep discount, he makes his money and he gets out, and the time spent on this is reduced, and the headaches, etc., everything gets reduced, and they finish it off. That's why what we say, many of them, they do a cut loss and get out. So that's what's happened in Italy and other places. I'm sorry, I'm unable to give you a thing, but it's a very mixed bag always. And in many countries like Japan and all, they went on extending and pretending and extending loans for long, including the banks also were in deep trouble.
Okay. So taking a cue from that question, IDBI's loans were bought out by a government fund in 2004, right? Neither IDBI improved financially, nor the government-backed fund realized sufficient value from the assets that they bought. So why you think this failed? This failed. Why this failed, and why the new model is expected to work? It's a similar, like almost.
It is almost similar. In fact, there is still jury is out as to whether the IDBI thing worked out, because there are many of them said it didn't really work out. It took a long time before something could get realized, and there's a considerable time wasted. A few others said no, it worked out. So I don't want to sit in jury on this. But this particular thing is, it has got the blessing of the government. One. Second thing is, there is a value which is given, and it's not a unsure amount which is going to come in. You don't know how much is going to come in, etc. Here is very certain. You're going to get 100 crores, or you're going to get 5,400 crores. Not 5,000. What is 18%? 36,000 crores at the outermost. And if you're in a position to get more, fine. Otherwise, it's okay. And the banks have been sitting idle on it. And earlier, I think it was substantially IDBI's major exposure itself. And most of them, and a few of them had with other banks, but most of the exposure was IDBI itself, coming from its good old days of DFI. And in the last stages of DFI, many of them many of the projects didn't take off. But I think this particular thing should be given a chance. And now, subsequently, we also had the benefit of ARC experience. That was some resolution. IBC experience has also come. So the experience of IBC, ARC, etc., would come in handy to ensure that we are in a position to realize better than this. But as I told you right in the presentation, the proof of the pudding is in eating. Let's see how it actually transpires, and whether subsequently we may say, no, this also worked out, this didn't work out, or if it works out, well and good.
Okay. We discussed that the stakeholders will be both public and private sector banks, could be. Yeah, is what I also. That's a good thing that we are getting inclusive rather than saying, okay, this is only for PSBs and you find your way. So we are saying, no, the government is making it more inclusive. What is the strategy, Kannan, in this? Why are we doing this private and public together?
No, basically among the private also, it will only be the top 3 banks which are having large exposures to corporates who will be participating. And both the public sector banks and the private sector banks, maybe in a bigger way, they're both either swimming or sinking in the same sea. So, it's better that they all come together, hold their hand, and probably they'll remain afloat. Otherwise, the entire ship or the company on which they have put the exposure will not fetch them anything and will only have more headaches. So I think we have already seen in the last 2-3 years, this collaboration is improving a lot. But the time taken in this collaboration is more difficult in small ticket loans of 1,000 crores and 700 crores. Therefore, I think this particular process is being adopted so that the entire thing is given. And the private sector will actually, like even the public sector will be only passing it on to the NARC, and it will be the NARC and the AMC which will actually be taking the call. You're handing it out to some professionals who will do the needful on the process and ensure that they get a good value.
Okay. So Madhukar asked a question. He said, sir, you mentioned that the assets which have become bad in nature because of fraud involved will not be eligible for transfer to this new model that we're talking about. So he says, so the large fraud that happened, say in PNB, are we saying that they are not eligible, and that's a lot of money?
That's it. Whether it's a large fraud or a small fraud, fraud is a definition of fraud. So whether it's a small fraud or a big fraud, you can't say if he has committed murder with a single stab or multiple stabs, it is still a murder only. Similarly, a fraud, whether it's small or big, is a fraud. And for whatever be the reasons, I think the government has decided that fraud will not be part of this.
Okay.
Accounts which are bad, their fraud has been detected, and in all these cases, forensic audit would be done, and which will give you a preliminary idea as to whether it's a fraud or not.
That brings a little bit of element. This is what I feel. That's my personal thing. That could be a little bit of a tricky situation, because there will be some kind of frauds that are committed here and there on many of these kind of assets. Are we saying, if you say completely that everything is out, and it could be an inside fraud, it could be an outside, whatever it is. If you say no, they are all excluded. So I wonder how much is the kitty then.
It all depends on how much of convincing you can do to the government to say, because we have had scenarios where frauds have been there, and the resolution has taken a long time, and they didn't want such a thing to be stuck. And then so they basically want this particular NARC and NAMC, what you call the NAMC, to take off quickly and then resolve the assets. And in the case of frauds, with the government agencies also getting involved, the uncertainty is much more. So even the government itself felt that we wouldn't like to do it, because it's very difficult to justify sale of a thing to a fraud, and then subsequently the buyer also will ask for an indemnity from the government, saying that in the event any fraud has been declared, I don't want to be held. So all kinds of issues will come up. So people want to have a clean slate to be sold, relatively clean. In the sense, it's just as so obviously it cannot be clean; it is be dirty only. The very fact is you're talking about a bad bank.
Yeah, it's going to be interesting.
What I would say, avoiding a tainted slate.
Sorry, come again.
Avoid a tainted slate rather than a dirty slate. A dirty slate is acceptable, not a tainted slate.
Yeah, but I don't know how many of our assets will be that clean that it can be taken over.
You're true, KK sir. In fact, a couple of bankers actually have raised this issue. How are they doing it? Because they know that a good number of them also come under that category.
Yeah, that's correct. So okay,
let's see how it works out.
Okay. So there is another question from Desai. He says, Mr. Desai, he says that there is this move that the government will guarantee the sovereign bond. What is the logic behind this, and will it have a good impact on this model?
I think I already told you the idea is they'll give a guarantee for the face value of the bond, less realizations. So they are expecting that the AMC will do a good job of realizing X amount or more than X amount, and for all they may expect that they don't have any outlay at all. But I think that is expecting a bit too much. But I think that their expectation is their outlay will not be huge. So they are only guaranteeing on the face value minus any realizations.
Okay. Okay, I think I have a question from, he must be a stock trader. I have a guess. He says that if the bad asset has already been provision has been made, okay, the provision has already been made by the bank, and that is sold out to or transferred to the NARC. So we are seeing that immediately there's a 15% of the bad loan comes directly into the bottom line, right? So are these banks? Some of the banks are going to have suddenly a lot of money, a lot of profits.
Let me take you back to my calculations. The average valuation is around 18% of the face value of 200,000 crores, which comes to 36,000 crores. And the 15% of that only is going to come to the banks. So all the banks and institutions put together will get 5,000 crores. So it's not such as they're going to get some 1,000 crores and 2,000 crores everyone. Yes, banks like SBI, which has got a large one, may get about 1,500 crores or something like that. I don't know. I'm just giving you a ballpark figure. But it's going to be distributed among all 9 or 10 of them. So it may be 300, 400 crores, which may not be a very big amount, but yes, it gives a big relief to them.
Yes. I think that's a brilliant question. There is a
in fact, I did make a mention. I did make a mention that the bottom line will improve. The profits will go up.
Yes, and I think that there's an opportunity out there. For all those who are.
See, they're effectively monetizing the asset, which is not fetching them anything, and it's idle now, and they are at the wit's end trying to dispose it off one by one.
Okay, yeah.
The only thing is, instead of putting their own capital, they wanted the government to put in the capital, and the government has conveniently said that you do the needful. That's all.
Okay. Karan, we are just past the 5 o'clock. So just one more question, a couple of questions, if you don't mind. Hold you back for another 5 minutes. So stressed assets have been a serious problem, and the government has tried to resolve the issues, but with limited success. So what are the learnings from the past and how the proposed bank is going to be different than what has happened earlier?
No, I think we are mixing up two things. The stress asset has not been caused by this bank. So this bank is now actually going to take it over and turn it around and then converting it. So it's not going to be an experience. It's going to be a one-time experience. And it is like a ARC, which will actually be armed with both capital, because the banks are going to give the capital, armed with some specialists and some turnaround specialists and sector specialists, financial people, etc. And some funds also, which will enable them to either turn around the company or strip the company and sell it off, depending on some. Some of them may say, you got excess land, you sell it off. So today the banks are unable to do this. So actually they are trying to monetize it. The stress assets have been caused not by the bad bank and the ARC, it's been caused by the bank itself, and not necessarily by the bank itself. In all cases, it could be a chain of circumstances, the industry, the payments facilities, the interest rates going up, or maybe certain mishaps which has taken place, some damages, some hurricanes. In a few cases, the dumping of steel. We saw power in power sector is a big issue where power uptake is not taking place, and even the uptake is taking place, the payments are not coming on time. And now with the government's focus on renewable energies, many of the thermal projects will get. So it's, and in the road projects, certain expectation of a huge surge in traffic. So the traffic is going up nowadays, but surge in traffic on the highways did not materialize. With the result, the toll collections did not materialize. The clearances of way for the projects. So it's a combination of various factors, and believe me, the bankers generally factor in this quite a bit. Maybe they have a bit over confident that many of these risks, which they probably underpriced the risk, and therefore felt that, for example, they felt that once I have got a commitment from the electricity board, I think they will make payment on due dates. But you find that payments don't come for 6 months. So what can you do? And road clearances have not taken place. So what can you do? and still dumping has taken place. What can you do? Foreign exchange has gone for a toss. What can you do? So it's a combination. I'm not saying every banker would have factored in some risk, but expecting, yeah, how many of us predicted pandemic? No one.
Yeah.
And I think no, and different sectors are facing different kinds of problems. None of us them visualized. Hotels were a fantastic industry. Now it's in deep trouble. Even roads are in deep trouble. Automobile industry, which I thought it will be in deep trouble because of pandemic. Now, because of pandemic, they've got a huge. So, circumstances change. I think the stress asset need not necessarily be attributed to the banks themselves, but yes, banks will be a bit cautious. One. Second thing is, banks also ended up taking up a lot of large infra projects, etc., where they did not have either long-term funding, and they priced these projects almost like a medium-term funding, and therefore created self-created stress in the system.
Okay. So, Karan, my final question to you before we wind up the session is: will the NARC set up and transfer of bad assets to it will encourage banks to dilute due diligence during the new lending process? How can India avoid this danger and prevent a new slate being created for NPAs?
In fact, if you've seen my slides, I specifically made a mention that this is not a panacea. This is not a permanent solution. This should be a one-shot exercise and done with it. Because the moment you start keeping a door open, then you rightly mentioned that people might say, oh, if it becomes bad, you can sell it off to this NARC and no questions asked. I think that will not happen. One, mainly because of this. Second thing is, why should the government keep giving guarantee? I'm sure they will face a lot of issues trying to give a guarantee for this particular asset. So I think they can't give a blank check for the guarantee. So the government also will be a bit cautious before they are doing this. So I don't think so. It will be there forever. So banks, whatever they've learned in the last 5-6 years of stress assets and the AQR, will have to be careful. And fortunately, if the DFI also gets set up quickly, to that extent, the pressure on the banks for infra funding will get reduced.
Thank you. Thank you, Kannan. I think I would like to wind up session. But before I wind up, is bad bank or the national ARC, as we call it, a good move? Your final words.
See, as I told you, the proof of the pudding is in eating. So we need to find out how it is a move essential because both the banks were not in a position to actually come together and then do a resolution process. By combining all the assets in one particular entity, I think the process could be expedited. And if it works out, then I think the banks themselves may do it. One advantage now is that the public sector banks itself number has come down. So, when I was working, it was 28 banks. Now it's come down to something like around 13 or 14 banks. So, which is a very, very handful. And some of the smaller banks are not into large ticket purchases. And therefore, it's a handful of people. And therefore, with this kind of experience, maybe they themselves will come together and say, let one of us handle this, or let's all go to an ARC and say, you buy this. The problem with the other ARCs is they didn't have the capital.
Yeah.
They didn't have the capital. And that is something which has now come in the support because banks are giving the capital and government is giving the guarantee. Therefore, it's a big. So it's a difficult funding issue and capital issue which is being resolved in this way.
Yeah, I think that's a big difference, which may make it possible to succeed.
But hopefully, it's not continue forever.
Yes, so yeah, that's true. Thank you, Kannan, for coming over and
spending
time with us over an hour. Ladies and gentlemen, before I bid goodbye to you, there is a small announcement for you'll see a slide which will come up on your screen right now. Digital team, can you please put up that slide? Okay, so Wednesday, April 7th, we are going to have the 150th session So, we started this journey of business and banking dialogue sometime last year in March or April, and we have come a long way, almost more than a year. And 150th we're going to have on April 7th, that is next week, Wednesday. And our guest is speaker is Mr. VG Kannan, founder and CEO of KTM and 197 Communications Limited. And the topic is India the next global center of payments innovation? You will hear from Mr. Sharma a whole lot of things. He's got tremendous experience, and he's heading one of the big payment companies also. So do join us on Wednesday, April 7th. And with that, you good evening and have a wonderful weekend in front of you. Thank you so much. Bye-bye.
Thank you, sir.
Thank you.